Mario Kart.
Hi everyone, I'm Juan Gabriel and you're watching One on One, the show where we play video games with tech titans. This time, we're playing Mario Kart. Today, I'm thrilled to welcome Lex Sokolin, a fintech entrepreneur and currently the head economist at ConsenSys. ConsenSys is a software company and venture studio that has helped incubate apps the likes of MetaMask and Gnosis. Lex is also a visual artist in his own right and publishes the Fintech Blueprint newsletter and podcast, reaching more than 100,000 fintech futurists and nerds. Lex, what an absolute treat to have you here today.
Thank you so much for having me on. This is going to be fun.
So I have to, start us off. Did you have much practice with Mario Kart before this?
Maybe 20 years ago, and then a good 5 minutes of realizing that maybe the childhood wasn't as rose-colored glasses as I remember it. These things age a lot worse than I'd expect.
That's true. The graphics aren't also the best. Well, as we kick this off, one of the things I like to do with our guests is to gently ask them to perhaps date themselves by telling us about one of their favorite childhood games growing up.
Ooh, that's a great question. I think I grew up very nerdy, and I think that continues, but I was a big fan of the role-playing games that came out in the 90s, so kind of the Baldur's Gate and then the Diablo series, I would say, is probably where I spent most of my time.
Oh, that's exciting. Hopefully we'll give you your memories back in Mario Kart as well. No role-playing here, unfortunately.
No, just the reality of being a cartoon character in a vector world.
Well, there's a lot to unpack in your career to date. So help us understand a little bit more about this earlier, Lex. What were you like when you were in college, and what led to sort of the career decisions that ensued afterwards?
Yeah, so I've always had kind of a two-direction brain, and growing up it was a bit of a challenge because people get kind of on one track, and being good at the one track is what gets you the advantage. But I grew up doing a lot of visual arts, so drawing and painting, and that turned into kind of website design and a lot of new media stuff, so like Flash back in the 2000s. And then the other side of me was kind of very traditional finance, math, economics. I studied economics in college, and those two things almost didn't touch at all. I was in econ and law undergrad. Those were the two majors that I went after, and a little bit of poli-sci in there as well. And then as my kind of side gig for money, I worked on website design, and then I worked with a theater and dance professor making these like interactive like multimedia combinations of video, and she had performances where she projected them and stuff like that. And so you can see how it doesn't really connect. But then you fast forward 15 years, and we're in this world where some of the most valuable assets in the world are generative art pieces that are being traded on crypto networks using decentralized finance that are made by software artists, and these things are packaged into instruments and managed by treasuries. And so I think I've been very fortunate in finding that the world has congealed some of my interests together into a career that actually makes sense, and I'm able to bring both of those to bear.
Well, I'm excited to hear that. I can't imagine what doing theater would have been like, or must be right now in college campuses, and the potentials to collaborate with different parts of the web. Very exciting.
Yeah.
So let's kick off the game. Select your character. I'm going to be Yoshi because he's my favorite, or she. Who are you choosing?
I have to go with Luigi.
I'm a Luigi.
I like that it's a little bit off-brand. Yeah, a little bit weirder.
All right, I'll choose some easy ones for us.
Let's start at the start.
That's the right place to be. Okay, so in previous interviews, as this kicks off, you've sort of mentioned that you've collected a lot of the gold stars, and you were touching upon some of those in the past. Things like Lehman or entrepreneurship, Amherst, Columbia, ConsenSys. What led you to sort of build your own brand? And I'm thinking, of course, about the fintech blueprint and urban estate and all these other things. What spurred that?
This multitasking is fantastic. I love it. Yeah, so it was actually came out of having a problem, which is, I didn't really grow up as somebody really focused on sales or like entrepreneurship or trying to be kind of really focused on distribution. I grew up doing a lot of academics and being pretty introverted, and then thinking that like analysis and like understanding a thing was the most important skill, and that's kind of what got me into Wall Street. But once you kind of interact with the world a little bit, you start to realize that nothing happens just because you think it. You actually have to do things. And so, coming out of Lehman and doing my first startup, like it was really difficult for me to learn sales and to learn marketing and to learn how to just like be a person that other people know that I exist, and all of that requires a lot of effort. And like nobody really teaches you how to do it other than by doing it. And so I kind of came to the idea that like I had to manufacture for myself a system that would give me credibility, and that was lots of different approaches to that at first. Like my first approach was, okay, like I'm a young entrepreneur, it still requires like I don't have enough credibility, let me partner with people, let me bring like more experienced people into the business so that they generate credibility for me. And that was fine. I think that ended up working a bit in my first company, but I just didn't like this feeling of like, in order for someone to pay attention to me, I needed to have a more experienced partner, because it's just like very disempowering. And so I started thinking about like how can I build systems and like machine systems, literally, like how can I get a bunch of automation and robots, and like what are the practices I can put into place that make others just like aware of what I'm doing. And sometimes chance can just solve that for you. So like what I mean by that is so much ink on the screen, can't see. So what I mean by that is like sometimes you'll just do a good job, right, at your business, and you'll get lucky, and so you end up getting like famous or known for something. And that's fine, that's great, but it's much better to not have to wait for sort of the roll of the die, because you can just learn the skill, or you can figure out how to get attention from people. And so, I spent, I'd say, from 2014 to about 2017, really establishing like a presence, like having a writing practice, going to conferences, forcing myself to speak, and then starting to think about, well, what are like machine systems that I can use to get myself content and so on, and I kind of worked on LinkedIn for a while, and worked with the research practice that I was in, and I'd say just kind of evolved from there.
Well, Lex, you definitely built up some reputation on the first race where you beat me. Second one was a little bit different of a situation, but it is interesting to hear that as an entrepreneur, how do you created your own brand, your own story, to make sure that it wasn't attached to others. How, I guess, do you in your career think about helping others with that? Perhaps letting others attach themselves to you? Is that a way to help, or do you encourage others you work with and mentor to sort of more build their own brand?
Oh, that's a great question. I think what was maybe a little bit more of how do I put it, was a little bit more discretionary. Like you didn't really have to be good at social media necessarily.
I see you
in
trying
2010.
to throw at me.
I'm getting you. I'm getting there. It's happening. Yeah, like you didn't have to necessarily be really good at social media or know how to tell the story and so on. Like you could get away without it. But I feel like these days it's almost impossible. Like especially if you're on crypto, if you're not communicating publicly, if you're not on crypto Twitter, if you don't have a point of view, then like, I mean, you almost don't exist, right? Unless you are like a complete superstar in the sense that like you can just program your whole thing and get away without having a team. So I feel like these days, I love being able to give people a voice to the extent that I have any platform. I think that's really important, and I think teaching people how to do like, oh, let's go. This is going to be really bad.
Oh,
you.
That's Bowser's Castle. Oh, it won. Oh, this is going to be a mess. The quality of the conversation might drop.
Yeah. Yeah, so like I think teaching people what it means to express a view and to be confident in that is really key. And I guess end of the day is just not optional, right? Mm-hmm. Even if you're a developer, the information that you're going to get isn't going to come from Bloomberg or some walled off like investment banking source. It's going to come from you talking to your peers.
Right.
And so I just feel like there is no choice but to put yourself out there. And like one of the encouraging things is that actually some of the people who are the best at being public are big nerds who are not super, like extroverted or charming or anything. So it's not that you have to have some special skill set to be able to do that. It's more that you just need to be willing to be vocal and to put yourself out there. And in most cases, you're going to find your community just by the fact that you're like engaging.
That's powerful, and I think it really rings true, at least to my personal experience and to the people that I really admire. Especially on this topic about, I'm very grateful that it's not, that it is different and perhaps nerdy or very interested people that are getting a lot of the recognition and the visibility that I think it has been underappreciated in the past. To move us a little bit as we navigate Bowser's Castle here, to some topics that are more professional. As the head
this is pretty humbling.
As the head,
this humble town over here. Okay, go ahead. Yeah.
As the head economist at ConsenSys, there's one thing that's very exciting happening right now. A lot of token-based projects have been around for a little bit of a while now. It's been a great space for experimentation to figure out what kind of tokenomics don't work, and things of the sort. So I guess the question is, what's your general view on how we should evaluate and think about tokenomics? Do you have a framework that you apply in mind and at work when you look at any kind of token-based project?
Yeah, I think, there's, the first thing is like, what's your general posture, right? Like, you can choose to be super skeptical about the whole thing, and that's fine, but then it doesn't really get you very far in the sense that like, there's a world in which tokens and Web3 and all of this is like a hallucination and we're wrong, right? And then there's also a world in which it's not a hallucination, but we're all going to fail. That's like your 2x2 matrix. Congratulations on your podium finish on Bowser's Castle. It's great. And so there is definitely a world where like it doesn't work, or it was like a hallucination. And I think that's just like a very not a very interesting place to be. So I start with the premise that like you're welcome for this as well.
Lex.
I start. It's just I don't want to win. That's my excuse. You start with a premise that like, what if the tokenomics and Web3 and all of these behaviors, they're real and they're interesting and they're sort of like they can be sophisticated and correct, and that they will work and they will outcompete traditional Web2 companies and things that we used to do, but is sort of an outdated playbook. And so that's a much more interesting place to start. And then I also kind of think about it as, I'm not the best economist in the world. I don't have like endless training in economics. I have some training in economics, but that's not really what you need to win on anymore, because in the previous world, like you get a PhD in economics because you want to be the best at like data analysis and very sophisticated statistical analysis and like a really good sort of formal mathematical understanding of what a macro as well as a micro model of the world looks like. And crypto is not like that. Crypto is applied macroeconomics, meaning it's like for the first time ever, we can all play central banker. We can all I feel good.
Lex, rising.
I feel okay about my performance.
That was
I'm
really
doing
good.
fine.
Still second.
Yeah.
Again, I just have.
There's only two of us.
Well, we have a lot of CPUs, and sometimes they beat us. So it's still fair. So I'm very impressed that you're able to talk about these topics while we're, of course, playing video games. So more props to you. In the past, we've talked about different sort of ways of evaluating the kinds of tokens, right? Sometimes you have the notion of a computational token that's like computing code, and then sometimes there's tokens that allow sort of humans to connect and interact. What's your take on how those interact and how tokenomics overlap like that?
Yeah. So as I said, it's applied. So that means you're experimenting, and you can have experimental results like in a lab. So that's different from generating some big model and wondering if the model is right or not. You don't need a model because you can just test it. But these systems, they're not all identical. In that tokens are kind of like information or hyperlinks. Like these things aren't. They're not like a book is not a poem, and a poem is not a sentence, and a sentence is not a label, and so on. And so. I kind of think of it at different levels. At the very bottom level, you'd have something like a computational blockchain protocol, or a Bitcoin protocol, or Filecoin, something like that, where you need to really hard code everything into. You really need to hard code everything into the blockchain itself. You don't have the privilege of like messing up how gas fees are calculated, because that's just going to blow up your relationship with your consumers. Like you can't. But then not everything needs to be so strict, right? So for a base layer protocol, you need to be mathematically accurate. But then once you go kind of up to a DeFi protocol or like an NFT platform, it becomes a little bit looser in that, tokens are things that you kind of add on top of a platform. You use it to spice the thing up. And so your rules might be driven by a little bit of governance. They might be driven by a little bit of mathematics. You might have a committee kind of change where they send yield farming or token farming, or they might change where the rewards go, right? So it's not as strict as a computational blockchain sort of mathematical rule set would be. And so that's kind of one layer up. And then if you want to go even looser, you get straight up into just DAOs that are like investment syndicates or media syndicates, where there's really, it's all just human organization, right? It's none of it is strict and computational. All of it is really about how like people come together and relate. So you're thinking much more about the theory of the firm than you are about like some sort of idea about the objective function of what you're optimizing and so on. And then once you get out of that, you still have ideas around tokens as objects. And so there's some really fantastic, like Oris financial instruments. There are some pretty fantastic tokens that, look like mortgage-backed securities, or they look like some, like tranching of risk, of yield, or they look like a PIMCO fund for fixed income, or they look like some other asset allocation. And then separate from that, you have digital objects that might do things when you interact with them, or they might have some like art quality to them that behaves differently when they're held by a lot of people that burn them to mint some other, like, if you look at the work of Murat Pak, like all of his work is amazing like that. And so those digital objects have almost nothing in common with the tokens that power a computational blockchain, because they are entirely derived out of like human interaction with them, and they don't really expect there to be like system-wide incentives. So I think when talking about tokenomics, it's almost like, well, what do you think about assets, right? Like, well, there is 500 trillion of assets, and they sure are different. And you have to be, I think, very careful not to equivocate about them.
That's impressive. Again, walking us through this framework. So if I could play back some of this, and that's why we ended up at the bottom of the totem pole. Let's let this race pass. Select the map, and we'll let it pass in the background. But so to dive into that, so first layer that you described is almost like a layer 1 blockchain as well, or not necessarily, but mostly those qualities. The second one, I guess, would fit most protocols in play right now that have some kind of human component, but a computational component in them as well, right? Third layer being purely human organizations. I'm guessing this fits mostly into DAOs, right?
Yeah.
And
yeah, I mean, it's like you would think about like the constitutional order of the United States, right? Like that's the same thing as the Ethereum order of the computational blockchain. That's very different from, okay, within the constitutional order of the United States, there's the financial industry, which is different from within the regulated financial industry with its like soft rules. There is Goldman Sachs, and then there's SoFi, and then within SoFi, there is the student loan, right? And there's different variables on the student loan. So I think you have a similar kind of pyramid in the crypto world, except they're all called tokens, and they're all, most of them are marketable and tradable in real time.
And this fourth layer, it involves NFTs, but other things beyond that as well, right? Is what I'm guessing.
Yeah, I think there's, I use the words like digital assets and digital object to kind of drive the difference between a financial instrument being an asset, and then a digital objects like any object in the real world, an NFT. It's to some extent it's an artificial thing, but like digital assets are derivatives of real things. They're kind of like abstractions of real things, or maybe they try to capture or encapsulate some sort of like exposure or some sort of concept. So like the exposure of equity in a company, right, is like a very special type of mind virus. Whereas I think a digital object is a little bit easier to understand. So like if we were to tokenize Luigi and the car, right, and take the car out of the game, that would be a digital object. This horrible flower that I'm staring at, like that could be a digital object. So I think it's just different levels of thinking at which you're focused.
Excellent. And I'd be amiss, because of the nature of what we're doing right now, if I didn't ask you to sort of evaluate a little bit your perspective on how would we go about evaluating gaming and the role of gaming and NFTs from a sort of first principles approach.
Gaming and NFTs.
So gaming, metaverse, and this whole hype that's been built around
Right.
that. How do we go about thinking about that from a first principles approach? How would we distinguish between some of the things that are real?
We're sorry to interrupt. We're sort of in this weird moment right now where there's like or at least in where I sit, I feel like there's a pushback to the sort of like Moore's law singularity concept. Now, like 5 years ago, you couldn't get enough of this stuff. Like, 2030 is when the singularity happens and the AI super mind, collapses all of human civilization into wetware and builds a Dyson sphere around the sun at the end. But on the way there, we're sort of in VR dystopia where we're self-actualized in the VR world, in the rendered world. And then the rendered world obviously has, if we're there, that's where we perform economic function.
Mm-hmm.
And like there's some interesting things to say about like, well, these digital goods aren't worth anything because they're not real. Well, I'll give you a different example then, which is like, what's more important to your well-being, a slice of bread or having a particular brand on your t-shirt? There's a reason a particular brand on your t-shirt might be 100 times worth more than the slice of bread, even though the slice of bread is going to keep you alive and the brand on your t-shirt is just going to make you in front of other human beings. And the reason is that a lot of our economic activity is kind of like social. It's imagined, it's relative to each other. We find valuable not what is hard to make or what sustains us, but just what other people find valuable. Anyway, all that to say is the concept of the metaverse is a confluence of a bunch of futurist themes, one of which is, of course, the VR and rendered world. And you can trace that to games through MMOs and World of Warcraft and Minecraft and, a bit of the VR hardware stuff. So everything that Facebook was doing with Oculus kind of powers these ideas. And then on the other side, like none of the Metaverse VR stuff can work without strong artificial intelligence. I don't mean strong like general. I just mean like machine vision that can measure where you want in a 3D space, or being able to scan a room by just moving your phone around is a whole lot of math. Most of it, a lot of it being neural networks. So you have AI plugging into there, and again, Facebook, Microsoft, Google are all strong in that. And then the final bit is that is missing in just those worlds is all of those things are sandboxes. They're not places. They're not a Hobbesian place. There's no freedom to them. And you might say like, well, I don't want like a Hobbesian nightmare. I don't want to be taken advantage of. I don't want to have to build my castle and defend yourself. That's fine, but the outcome of that, which is you farm attention on Facebook and go insane slowly with misinformation. So the Hobbesian world requires digital scarcity and economic structure, like enforceable sort of ownership, scams, frauds, and all of that comes with it because that's human nature. But the Hobbesian world comes from computational blockchains and the infrastructure for markets and economies, which is essentially, at the end of the day, what blockchains do. And so you take these three things together, and if you meld them sufficiently, you get to a place where digital goods in a rendered world where we increasingly spend more and more of our time are not just ways to sell advertising, but a place for us to transact and create economic activity and be with each other. And I think a lot of that in the long run is 100% happening. If you zoom out and squint, a lot of those things are melding together. But at the same time, I think it's pretty easy to nitpick at particulars. And what's happened, for example, with ARC innovation and sort of like the public markets around tech and growth shows us that maybe we got a little bit ahead of ourselves. But nonetheless, I think it's directionally right, the overall story.
There's something really powerful about one of the many things you just said about that notion of humans valuing the social aspect of it so much. The bread versus the brand on the t-shirt example really helps paint it. And we have a section actually on the show that's called Explain That Tweet. And it reminds me a little bit of this tweet that you had where you have an image. I'll caption it for you guys. The new investment framework plus the old investment framework. And it's a little image of a bear and a bull and a gorilla and a carpet. Could you walk us through a little bit more about what's going on here?
Yeah. So I'm trying to cheat to get a little bit ahead, because the tally's not looking so good. Have you been moving this whole time?
I've been stuck. I've just started moving because I heard you move the keys.
Okay. All right. It's fine. Yeah. So look, the old this is kind of double tongue in cheek because so the old investment framework, or what is disconnected from the crypto markets, is sort of like the fundamental hedge fund investment. Well, it's not nice to pick on hedge funds, although who cares? But like the fundamentals investor who's like, this doesn't have cash flows. What's the next quarter earnings, right? And so there you've got a bear and a bull dynamic, and you sort of argue about it in the traditional Motley Fool or Jim Cramer way, and try to build Excel spreadsheets about like revenue. And that's great. Obviously, lots of people are unbelievably successful doing traditional finance. But I think what crypto made me realize in part is that even that, although it's kind of real, like it's enforceable with your claim on the cash flows relative to the equity and blah, 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 that's a story that we tell ourselves. Like, I'm never, for whatever share of whatever company, going to actually like enforce some set of legal rights to get, the actual underlying holdings. Something sits in a custodian, I get some sort of exposure, who knows? And then the market just tends to trade on this particular set of beliefs. And then on the other side is the crypto framework these days, which I'm forcing it a little bit, but I think it's kind of true, which is like, it's highly mimetic, right? It's all momentum and what's popular and kind of like, how does the crowd feel about something? And so the good version of that is aping into a protocol, right? Making 10x your returns, right? And so that's very mimetic and growth oriented. And then the opposite of that is being rugged. So having the founders, it turns out it was a scam and the founder's gone, and so is all your money, And so that's kind of the other dimension. But the sort of troll in there is that that's just the animal spirits, and the animal spirits have been talked about just forever in the markets, and you can't game the animal spirits. You can try to be a little bit ahead in your information, but you're never really going to win only on figuring out what the animal spirits are doing. So I think it's, on the one hand it's new, but on the other hand it's also like pretty fundamental to just how the stock market has always been perceived.
Well, that is a very insightful way and a funny and entertaining way to look at it. Lex, as we're coming up on time with our session here, I wanted to ask really quickly one other question we ask our guests, which is, what is your vice in a nice way? What do you spend too much time or too much money on?
Oh boy.
Where do you ape, what do you ape into, I guess, would be the right framing based on what we just asked.
Okay, that's good. I was going to go about, how expensive it is to have two kids. But besides that, I'd say I'm really, I guess my consistent mistake is that I'm really keen on generative art. Like, I think it's both beautiful. I think it's, especially the idea that you could mint personal generative art is kind of like this Andy Warhol moment. Like Andy Warhol almost, he took pop culture and said, you can print it for yourself, right? Like kind of Marilyn Monroe and the Campbells can, like, that's just pop culture turned into art. And now we're in a place where we can take that art and put ourselves into it when we mint the pieces. And that's very special from like the point of view of the history of art. But as an investment, I can't say, like, generative art, I think, has not found a utility in the way that PFPs have. So like, even if you think that the 10th cartoon lion project is a scam and is dumb, which it certainly is, they at least have the utility of being used on social media to signal sort of like your in-group belonging.
Right.
Whereas generative art and like all the art block stuff is still kind of searching for something other than just like a luxury good that you happen to hold. And so if I were to talk about advice, it's like, it's that stuff, because it's so compelling to me, but also a little bit of a trap.
Well, that is great. And we'll put some of your collections up there and some links to those so people can appreciate that. Well, Lex, thank you so much. We are coming up on time. At the very end, we always like to leave space for our guests to tell us about what's on their mind and what's important to them. So let us know what's top of mind for you.
Yeah, thank you for having me on, and enjoyed reliving how bad I am at Mario Kart. Check me out on Twitter at Lex Sokolin. And then, of course, stop by ConsenSys.net and grab MetaMask at metamask.io just to experience a little bit of Web3. And if you want to read some of my writing, check out the fintechblueprint.com, because I do kind of a weekly dive into a lot of these issues and ideas.
Amazing. What a treat to have you on the show. And we actually didn't do that badly on Mario Kart.
It's all relative, isn't it?
I hope you've enjoyed today's episode. If you'd like to see a specific guest or game on the show, let me know on social media or at email at thejuanonone@gmail.com. And if you enjoyed the show, make sure to join the majority of listeners and subscribe on your favorite platform.